Why do people love taxes? No, nobody? Why do we have taxes? My mom does this. Why do we have taxes?
Because the government said so.
Certain taxes do what? They do a lot of different things. I mean, you like driving on roads, don't you? Why do you think the roads are there? Taxes. Like stopping at the rest areas, you know. Let's see here. We like nice parks and things like that. Taxes. But Coggins' survey he was showing you there, that was through Guidestone. But they have some excellent resource materials. I'm going to pull one up. Registrar's tax guide. And that's not what I want. We don't want the 16 tax guide. That's already passed. I was locked up. How many of y'all do your own taxes right now? Got one. Mom and Dad still do some taxes for everybody?
Amen.
Amen.
My CPA does mine.
Let's see here. Okay, this is 2017. Now, obviously, we've got a lot of law changes in 2018. I'll try and discuss some of those that I can discuss with you that will affect. There'll be some minor changes on some of the stuff we'll talk about here today, but most of it's not gonna have a major change. I'll try to also cover it from a minister standpoint, but also any of y'all that are in a working position that's non-ministerial, you should hopefully get a benefit. That's the nice thing about this resource. It provides crossover between the ordained pastor and the non-ordained. All right, how many we got? We got some marrieds and some singles, right? Okay, because that's some of the big stuff too. Let's see if I can sit. There was one other resource I want to pull up. This one right here. This right here is the 2000. Let's see. Did he pull it up? Yes. This is the 2018 federal requirements for churches. Now, any of y'all that are going to be working in a church, I do recommend you look at this. This is a real neat tool as well. What I like about EDF, it's got the table of contents where you can just kind of click and go back and forth. Dr. Coggins had mentioned something about the compensation packages. And one of the reasons I wanted to bring this one up is because I dealt with this just the other day at what I thought was a pretty good-sized church. So yeah, I was really shocked at the question they asked me. They were asking me a question, a little bigger, about accountable reimbursement plans. But as you can see above accountable reimbursement plans, we've got housing allowance, accountable reimbursement, flexible spending accounts, and retirement plans. Just to touch on the accountable reimbursement, since I brought that up first. Accountable reimbursement plan, when you go to work for your employer, they ask you to turn in receipts to get reimbursed. That's called an accountable reimbursement plan. Those are the plans that everybody likes, because for one thing, if you're turning in the receipts and they're writing you a check for reimbursement, that's not taxable to you. That's taxable, and that's the way the government views that. Now, the simplest way to do that, if that's what they do, you say, you know what, when you go to work for this place, you say, why don't we create an accountable reimbursement plan? You're going to still give me the $200. Let me turn in my mileage of the actual accountable reimbursement plan. But actually, there's some rules you have to go through to do that, but it's not that hard. But still, like I said, this was a pretty good-sized church that was just giving the pastor, it was a pretty good salary. I was really shocked that they didn't have an accountable reimbursement plan, because I sent them this resource manual as a good guide for them to look at. I also sent them the guide off the IRS website. That's another website that has excellent materials, and so much better nowadays with the research tools where you can do a search, just like Google. You can go on the IRS website and type in what you've got a question about. And usually it'll pull up the form. Now, like Dr. Cobbs was talking about, that stuff can be pretty technical. So if you do have an issue, a lot of times that's where CPA is very helpful, getting into all the technical stuff. So we've talked about accountable reimbursement plans. Those we want that keep our income down. Housing allowance, that's one topic that we're going to discuss. Does anybody have any idea what housing allowance is? I know Dr. Collins knows. Housing allowance is where you get, we're talking about our salary package maybe over here. We got our package, you know, and let's just maybe say 80,000. We're just going to make a number. Okay.
I want to
You were
work.
about to answer that though, I think. What was your question? Were you going to say it is?
I said, isn't that when the church gives you like an amount of money to help pay for your house?
That's
Or gives you a
correct.
house?
Well, actually, what it is, there's two different models that usually they fall under. You take so much out of your package, say $20,000. Or they have a parsonage. Everybody know what a parsonage is, don't we? Okay. House you're going to get to live in. Now, sometimes underneath the parsonage, what they'll also throw in utilities. They may or may not throw in the utilities. You know, that would be water, garbage, power. And I see this a lot of times in different churches. Sometimes the smaller churches, over the years, guess what they had? They had a parsonage. The church, they may not be able to offer the bigger salary, but they give you a house, and then they can throw in a little bit of money, to pay the utilities. Some of them, even though they may not have enough money, that what they'll do though is they'll give you a set amount for your utilities. Anything above that is yours. Now, on the parsonage, if they're providing that, rental value. You got to make sure, for tax purposes, that you pick up the rental value just the same way as you have the income over here. So if they're paying you directly, you got to pay. We're going to talk about two different types of taxes. We got income tax. That brings up my next topic. Income tax and self-employment tax. Everybody knows what income tax is? Paid on our 1040. Okay. Does anybody know what self-employment tax is?
Self-employment tax would be you work, or you're an independent business, or you work for somebody else, but they pay you cash or whatever.
That's correct. That would be, a painter or, you, like I said, you run your own business, a pool cleaner, somebody that goes out, that's their job. You could run your own hardware store and be set up as a sole. Now those people pay two taxes. They pay income tax on their earnings, plus they pay self-employment tax. Now this will probably answer some questions. Everybody's got a paycheck before, right? Okay. We have income tax that's withheld. We call it, usually the stuff it looks like that, federal withholdings tax. And we also have what's called FICA. That's your Social Security and your Medicare. Okay? Kind of going back to my question, why do we have taxes? Well, these taxes pay for the stuff we were talking about earlier, parks, government facilities. We all know that when we pay into Social Security, that's our retirement, that's our parents' retirements. It's a social program. And we also know the same thing with Medicare. At some point, when hopefully we get old enough to retire, we'll step into that being our main insurance for our health care. Pastors are much like contractors. If you're a non-pastor, non-ordained pastor, you're going to have your Social Security withholdings. You're going to pay half of it, and your employer's going to pay half of it. Now, when I say you're paying half of it, that's what's withheld out of your paycheck. you may not realize that your employer is matching that. So they're not matching your federal income tax withholdings, but they are matching your FICA. FICA is 15.3%. So 7.65% of that you have withheld out of your check, and your employer matches that, and they send that into the government, along with your federal income tax withholdings. Okay. Now, as Dr. Coggins said, if you are a pastor, you're subject to this 15.3% tax rate, in addition to the income tax bracket you fall in. But some of the advantages you get are, of this package, if we say we have a $20,000 housing allowance, whether it's made up of either this way, the rental value or the utilities, or the actual dollars, this is excluded from income tax. Okay? Just from the income tax. If we have the receipts, we have to have the expenses in order to do that. So you can't say I want to put $20,000 in my housing allowance and, oh, I got a good deal. We only spent $10,000. Okay, what the government's going to say is you got to throw that 10 that you didn't spend on those receipts up here and now pay income tax on it. So let's reimbursements. I'm going to assume like it's accountable reimbursements. So let's say $3,000. Okay. Those are the reimbursements, like our mileage, going out to eat with maybe other staff members, or doing something special that's church related. Now remember, these funds are not going to show up on our W-2 as long as we turn in receipts. Okay. The other thing I wanted to make sure, your church may or may not have it. The one up there we're talking about, the flexible spending accounts. Wonderful thing to add. That's where you can put money aside in you have to spend it during that year on medical care in order to avoid the taxes. But they also give you provision when it rolls over into the next year. Now, y'all are all very young right now. I know some of us aren't feeling as good today.
Yeah.
So this might make more sense to you since you're not feeling good today. But when you have children, even though you may not have medical bills, they will have medical bills on. So, especially if you have like a deductible that you have to meet on your insurance, it's a wonderful thing to have a flexible spending account, at least up to your deductible amount. So that you don't pay taxes on that money. Did you go to sleep? There you go. Okay. So, you don't have to do a flexible spending account, but I would strongly encourage you, if your church doesn't have it, I would look into it. Then your retirement account. This is something that young people so often I see do not take advantage of. Your churches or organizations, if you're not at a church, I strongly encourage you though to participate in your retirement plan. Find out about how your plan works. Different plans are set up differently. Some plans are set up that they're going to contribute no matter what. A certain percentage of your income is going to go to your retirement account every year. Or they're going to put it on you to decide how much of your money, like in this example we're about to do here, how much of your own package are you going to give up for retirement? Okay? Other plans are set up where they're like percentages, where if you do 3%, guess what your employer will do? They'll do 3%. What if you do 0%? Your employer will do 0%. So it's almost like you give up money. You give up a little bit, but you're really going to get a great return if you participate in your retirement plan. Not only that, you're going to save the taxes on it. So if we had a 403B plan, let's say that it was, we're going to do 2,000 so I can keep the math in my head. All right. So what we got here, we got 20, 30, 25. I did the math on that right. This would be our, what we call our box 1 W-2. This amount right here would be. This would go on our W-2 in box 1. This would go in box 12 for our retirement account. This wouldn't show up at all on our W-2. And this would go in what we call box 14. Okay. Only talking about pastors right now. Now, the 403B, the box 12 I was talking about, that's going to go on anybody's W-2. Same thing here. This is not going to show up on your, whether you're a pastor or non-pastor. But the box 14, we're talking about the housing allowance. That's only for ordained pastors. This is for other information. Very helpful for your accountant. If your church does not put that on there, you must get them to have a letter. Your accounting will not be psychic. You are not psychic even either if you're trying to do it yourself. You need to have that in your file. And like I said, most of the times if I get a pastor that I do his tax return, they don't, most 95% put it in box 14. If they don't, I ask the church to give us a letter so that we can document that. Because it can get kind of confusing when we get over here to the rental value and the utilities. Okay. Going back, so what we've got here, this is going to be subject to income tax only, the 55. But for Social Security taxes, $75,000. It's going to be subject to this 15.3%. Okay? This most likely is going to put you, this is going to where you, we haven't even gotten to where we talk about deductions and that kind of stuff. That's what we're going to go into next. But there's no more deductions here unless you have expenses that were non-reimbursable. If your church chooses not to do an accountable reimbursement, you still need to keep up with all your expenses, because just like a sole proprietor that runs his own business, since you are being taxed on the same platform as with self-employment tax, there are certain deductions that you're allowed, like your mileage that's unreimbursed. You can go and subtract $5,000. You're paying a pretty hefty, and see, you're paying the whole 15.3. You don't have an employer picking up the 7.65. So that's very important when you're negotiating the beginning salary package. Any questions on that yet? Make sense?
But if they can pay the 7.65,
Okay.
but it's taxable income, right?
Right. If they pay it, it is definitely taxable income. What a lot of times happens, though, is the package is negotiated. You figure out the tax. You work with your accountant, and you determine, well, you know what? I need to have $4,000 to $5,000 or something withheld a year, and we do quarterly estimates. The churches, a lot of times, the secretary will take so much of your, let's say it was $4,000. So each quarter we need to pay $1,000 in. They set $1,000 off to the side, and they help the pastor by writing the check. But as Dr. Coggins said, if you're not just having that withheld and set to the side, that's additional income if they're paying it for you. This is one that's always confusing. You have to remember you can have it withheld from your paycheck, federal income tax withholding, because just like a sole proprietor, you're paying your self-employment tax through your tax return. Whereas employees that are receiving their normal W-2s, that's not the case. It's being withheld by the employer, and also your portion is being withheld. So that's a little bit of a quirk there. Okay, any questions on that? Make sense? No. Anything I left out on that part before I move to
You're the accountant.
Okay. I was going to shift to deductions for y'all and kind of get you. Blow this up.
What time is it? 9:34.
What time is it?
9:30.
Okay.
That clock is not right. Obviously.
I changed it.
Oh, on the retirement, I would love to tell y'all all too. There's some huge credits that when you first start working, your income's usually not as high as, I know we'd all like to go out in the world and make what somebody's making that's been working 20, 30 years, but that's usually not the way that works. When you have the opportunity, I know you will think, oh gosh, my salary's so low, but it's probably the highest salary you've had since you've been in school. If you'll participate in the retirement account, there are some credits. We'll talk quickly on some credits after I talk about some deductions. But I just want to re-emphasize that when your income's low, right now the government has some really good credits that are just set aside for retirement only. But your income has to be, I don't want to say extremely low, but it's really gauged towards either low income or, like I said, people first starting retirement. Great credits. Let's see here. I love this one right here. Must ministers pay federal income tax? Yes. Now, do all ministers have to pay Social Security tax? They do not have to pay Social Security tax. They can opt out. I would not recommend that to anyone to do that. I know it's costly when you look at that over there, how much it costs. There is a form where pastors can opt out, but you're basically giving up your Social Security benefits and your Medicare benefits. You're putting it all on you that you don't believe in the government to help take care of you with social programs. But you have to remember 30, 40 years from now, you have to pay that tax in, you're not going to get that benefit. So
They've revised the form a little bit. It used to be, and it has to be done within the first couple of years that you're
correct.
ordained. When I was first ordained, the language was very clear. You are a conscientious objector.
That's the word it's talking about. Kind of
And, for us, we might say, yes, I conscientiously object to how the government uses my money, but that's a technical term, and our denomination does not subscribe to conscientious objecting.
Yeah.
And
But
so
I
it
do know some
was,
Baptist preachers that I have seen their forms.
Oh,
I have done their tax return, and they are exempt from Social Security.
I know a lot of guys that there was a mad rush when they got ordained to get out of Social Security, and they checked that box without any conscience at all. And so,
The ones that do that, what I hope they did, hopefully they were the bivocational guys.
Yeah.
If they were bivocational, what that means is their other employer that they're working for was paying in. So you can sign that form, but guess what? It only goes against your church-related income.
yeah.
If you're working at Sony when they used to be here, or if you're working at Geo and you're a bivocational pastor, your other income you have to pay Social Security tax on.
Now there was a little bit of benefit, I guess, for guys that got in that got ordained later, like coming out of another career,
Yeah.
that had so many quarters
Already paid in.
already paid in, so they still were in the system, and so they were able to
Yeah.
kind of work the system in their favor. But it was all
Because the other downside is what happens if you get hurt? I mean, I never thought of this until it happened in my own family where I have a family member that is on disability. I mean, if you're not paying in, you're not paying in. So you're not eligible for any of those programs. Some of these questions here. How much income tax must I earn to be required to file a tax return? Well, generally ministers are required to file a federal income tax if they have earnings of $400. Well, that's because that's the minimum for self-employment tax. Can I use a simpler form? Most likely you're not going to be able to use a simpler form because of self-employment tax. What records should I keep? Well, you've got to keep all those extra receipts if you have housing allowance. You're subject to the same deadlines as everybody else, April 15th, but obviously this year we've got an extra couple of days. What if I'm unable to file my tax by the deadline? Well, I can't get extensions. You can get automatic 6-month extension. Should I prepare my own tax return? Okay. For all of us that I heard somebody, you have parents that use a CPA. You use your own CPA?
We use our own.
How many of your parents use CPA, or do they, or go to H&R Block, or do they do it themselves? Does anybody know? Do it themselves?
They use a CPA.
They use a CPA.
Okay.
They're good. We can all get knowledgeable and do things ourselves. If you just have a W-2, the tax softwares are pretty good. And if you're not eligible for any of the credits or deductions, that's what I would tell you. I mean, my wife's a teacher. She just had a W-2 and she was by herself. But there's some deductions that she would miss. Now the tax software would ask you some questions. That's the thing with technology nowadays. The newer software does ask you a lot of questions, but do you understand those questions is the key, and that's hopefully, if you go to see a tax preparer, they can help you answer those questions. Let's go over here. Hopefully the thing with the tax preparer, especially with the minister, is that they can help you manage the taxes. I would tell you some of the worst cases of taxes not being paid are pastors. I've got some of the best are pastors and some of the worst I've ever seen. I had one pastor, he was 8 years behind, because I know what happened. He let the first year get behind, and he owed about $4,000 to $5,000. That's a lot of money. But we all know if you broke that down into quarters, you're talking a little over $1,000. And if he would have either had a church setting it aside for him, or if he would have been setting it aside, that would have been a lot easier amount to manage. Well, that amount got big, so he didn't pay it. And then the next year, the amount gets big, and the mountain, it's no different than credit card debt. It just gets bigger and bigger, and you couldn't handle it. So he had to deal with some major issues. We just talked about the self-employed. We talked about the exemption. But like I said, I wouldn't encourage that. These are your quarterly due dates, as you can see here. This is always a tough one when you're trying to help pastors out, or anybody. The first quarter is due April the 17th. Well, guess when your taxes are due? The same date. So if you're already in a hole, that's what I try to tell people. The best thing to do is you got to get where you get to the next one and at least get a payment going, even if it's not the full amount. We've got to get over the hump. Let's go down. This is the step-by-step preparation. Everything from they walk you through, and you have similar resources on the IRS website. You have to know your filing status. There are going to be some major changes when it comes to exemptions next year, versus when you call standard deduction versus itemized deductions. For the current year, your standard deduction for a married couple is roughly around $12,000, and you get about a $4,000 personal exemption for each person in your household. Next year, they're going to really increase the standard deduction up. And they're going to get rid of personal exemptions. It will simplify some things, but it will also make it harder for certain people to itemize. You'll have to have even more itemized deductions in order to itemize versus taking the standard deduction. When we talk about itemizing, everybody familiar with that? Have heard that term before? No? Yeah? Okay, so you're either going to take the standard deduction, that's the amount the government gives you, versus this is your medical, this is your taxes, mortgage interest, charitable contributions, work expenses. Okay. Medical has what's called a floor, meaning that you have to have so much medical before you're able to use it. It's also based off of what your income is. So if your income is really high, you have to have even more medical expenses before you can start even putting them on the itemized schedule. Taxes are made up of income tax you pay in if you live in a state that you're paying income tax, or for us that now live in Florida, sales tax, because we don't have a state income tax. We are blessed to not have state income tax. We're one of the few states that doesn't have that. So we get claims sales tax. One of the nice things they do also on your sales tax deduction is you can add large purchases like boats and cars. In the year that you buy them, you can add your sales tax to that number. Mortgage interest, that's on your buying of your home. That's a harder one right now for people to get to claim unless you have a very large valued home, because mortgage rates are still low. Charitable contributions. That's going to be, your gifts to your church or to other not-for-profits. And work expenses. Now, work expenses are the ones right here. It talks about this Form 2106. These are expenses that you weren't reimbursed for. Okay? If you're a non-ordained pastor and you're out there working and there's certain legitimate expenses that you're not getting reimbursed for, they go on Form 2106. Now, a pastor, he's going to put it on Form 2106, and this is where